Hi. In our videos, we've talked a little bit about real estate investing in the past. Today, we would like to touch on that concept, but this time really focusing on farmland. What is going on in this country with farmland, for starters?
Well, yeah, it's very interesting. So what's happening is we're seeing a reduction of acreage of real estate in the United States by almost 2,000 acres per day.
Why is that?
Well, it's building of houses and commercial real estate that's taking away from our agricultural real estate. It's problems with farm families not being able to retain their farmland after a member of the family dies. And so then it's being developed as commercial real estate or whatever. So this is a serious thing not just in the United States, in the world. We're seeing a decrease in the number of farm acres in supply and demand. The less supply, the more the price goes up. And also, the climate change is affecting it. So where it's getting so hot, there's areas that can't, bring out or produce farm land anymore as farming. So that's an issue too.
So are you seeing major investment in farmland from more notable investors?
Yes, we're watching some of the most wealthy people in the United States, people like Jeff Bezos and Bill Gates. They've been buying farmland all through the country, and very rich farmland, stuff in the Midwest and along California, and they're buying that up as an investment.
Did they maintain the farms? I mean, how does that work?
Yes, they're primarily buying the farmland. They keep it as farmland. They lease it out to farmers who then pay them revenue of around 2.5% on their, which beats a lot of cash investments. And then they're seeing a lot of appreciation in the value of farmland.
So is there a way that your average investor can actually access this type of investment?
Well, in the past, it was very difficult. You either had to have a lot of money and backing to go out and buy a farm. And when I first got introduced to the concept of investing in farmland, that's about all you could do. And then there was large private real estate investment trusts, but you had to be an accredited investor, which a lot of our clients are not accredited investors.
You have to have quite a lot of money.
A lot of money, like well over $1 million and a high income and stuff like that. So enter certain real estate investment trusts that are sold on the stock exchange, like you would buy a stock. These REITs have to pass on the money they get from rental, and you're actually invested in farmland through the REIT.
Wow, that's really neat. And how do they perform historically? Are they doing well?
They do quite well, not as well as the stock market as an index, if we look at the index. But the more important thing is they're not correlated to the stock market. So when you look at how they did very poorly in 2014 and 15, they actually lost money in 2014 and 15. But if you look at the S&P 500, it was actually up in that period. Likewise, if you look back in March of 2020, when the stock market took a big hit, they were actually up in that period. So they're not correlated to the stock market, which by adding this to your portfolio, you reduce the risk of your portfolio.
It's really, really interesting stuff.
Yeah, we would actually recommend clients have somewhere around 5 to 10% of their money in something like this, especially with the market at all-time highs, to try to reduce the risk in their portfolio.
All right. Well, as always, if you have any questions, please don't hesitate to be in touch. Thanks for watching.
Thank you.